Global trade issues are now showing up in the statistics. We've been hiding the truth behind jobs numbers and hilarious unemployment statistics, but some things can't be hidden. When we look at the numbers globally, there is a clear and definite slowdown that has found its way into the economy. The debt bubble has expanded to a level it has never been at, and with quantitative tightening becoming the norm, how will a crisis be avoided? You came here for the truth, so let me unveil that for you. Today, I have two important topics to get into. First, we're going to look at the stock markets. Then I want to join that in with the trade issues that are happening today. We begin by taking a look at the U.S. stock markets, the top three on the right-hand side, all in positive territory. As I record this video in the middle of the day, you can see the S&P, NASDAQ, and Dow Jones all green right now, but they began the day in the negative, and it's been a really violent day out there. So we'll see by the time the day ends where it all will go. Apple was first leading the charge on the way down, then is leading the charge on the way up. It is a very topsy-turvy day. S&P turns positive as JP Morgan and Apple lead stocks higher. That's what the articles are saying now. In 2 hours from now, who knows? Hedge fund titan Ray Dalio says that the world is counting on stocks going up, and that will mean trouble in a bear market. You know, this one individual is very important worldwide. Everybody's listening to what he says. The world, by and large, is leverage long. When there is a downturn, I don't think there's much to protect investors, and obviously nobody believes that the stock market could ever go down, and any sort of event is simply an opportunity to buy more. Dalio's comments come amid heightened volatility in the U.S. stock market. The S&P 500 fell into correction in October before rebounding, and that's all people are really worried about. Paul Tudor Jones says that we're in for a global debt bubble and headed for some, quote, scary moments. From a 50,000 feet viewpoint, we're probably in a global debt bubble. I completely agree with that, except for the word probably. He's famous for making big macro calls. Global debt to GDP is at an all-time high. Nobody cares about that because they say, quote unquote, it can be managed. The investor added that some, quote, scary moments may come in the corporate bond market, something that I've covered here quite a bit over the last while because we've seen it expanding further and further and further. And look at what has happened in Europe. The ECB is buying all the corporate debt through their CSPP program, which has been magnified further and further. They say they're going to stop, but can they really without causing a collapse? One last article, Powell credits Fed policy for the U.S. economy being in a good place. Everybody wants to take credit for why the stock market has done well since March of 2009, and certainly I would have to give the Federal Reserve credit for doing what they have over the last few years, implementing the most ridiculous policy that has ever been put into place, and that is to buy up all the worst toxic garbage and put it onto the backs of the taxpayer, or use the Federal Reserve's quantitative easing policies of manipulating the value of the U.S. currency in order to prop up certain garbage toxic markets. Federal Reserve Chairman Jerome Powell said the U.S. economy is in such a good place right now and credited the monetary policy for helping to engineer growth. He has also cautioned markets that every Fed meeting from now on will be live for the possibility of an interest rate hike. And essentially what they're saying here is that December, we got a rate hike coming, and think that it could even come sooner, perhaps. Maybe that's what he's suggesting. But they could go even further, beyond December, increase. Beyond that, increase again. They're suggesting that this will continue to happen. Don't expect there to be a reduction in interest rates while the whole world is calling for a reduction. Oh my goodness, it's too bad already, and it's only 2.25 at this time. Apple, bellwether for technology stocks across Wall Street, dips into a bear market territory. This is what happened, and now suddenly everything is changing. Why? Because some analysts suggested that now is the time to buy. Even Jim Bear Stearns Stern's Kramer told everybody that selling Apple stock is a terrible idea. And you saw what Warren Buffett did in the 3 months prior to October. He purchased up another large amount of Apple stock, and that of course helps this company be pushed higher with billions and billions of dollars being added in there. This happens to be just one of those stocks. JP Morgan is another one that has done well after Warren Buffett bought in. Perhaps that's what the market is looking for. This is the HARPEX, and I'm going to forward to the explanation of that. The HARPEX Shipping Index is a container ship index by the shipping brokers Harper Peterson & Co. The HARPEX tracks weekly container shipping rate changes in the time charter market for 8 classes of all container ships. All right, so that's what the HARPEX is, and I'm going to show you some details of why it's important. It's considered a suitable indicator of global economic fleet shipping activity since it tracks changes in freight rates for container ships over broad categories. This index is slightly different than the Baltic Dry Index, which is something I've shown many times before. That tracks freight costs for dry bulk ships that usually carry bulk cargoes and raw materials such as coal, ore, and grain. That's the HARPEX, and take a look at it. You can see here that it has come down 27% from its peak that was experienced earlier in the year. Now, while it has gone up over the last year, I just wanted to note the fact that it has come down significantly, a huge drop. So this is obviously related to what we're seeing with all the trade issues. Everybody is worried about this, and this has really shown up in the statistics today, and that is a big concern because it can't just change simply by a one handshake, by one agreement. It's a whole series of events that needs to take place. In the meantime, we've got volatility, we've got concerns, and it's very interesting that when you look at this now, when the HARPEX has a problem, the S&P 500 has a problem. They are highly correlated, and you could see this in the previous events. It doesn't necessarily mean that there's going to be a major global financial crisis because the HARPEX dropped by 27%, but it does give us an idea of what's happening today. So you can see that on the chart here. I think this is absolutely critical to understand, but I have a lot to cover, and I just wanted to show you this, that while much of the world is focused on the stock market losses this week, the drop in shipping rates as trade declines because of the trade dispute between US and China, emerging market currency weakness, and tighter trade conditions is an omen of slowing global economic growth. At the start of the supply chains, dry bulk carriers move raw materials like coal and iron ore from mines to smelters, while container ships complete the cycle by carrying the vast majority of global manufactured goods from factories to consumer. The flattening out of the Baltic Dry Index, corroborated by the Container Index as well, points to a slowing down of the global economy for sure. That's what you need to know, and I think I'll leave this article at that. It's incredible to read that line. The world's largest container shipping company warned that there would be a price to be paid for the US-Chinese trade conflict next year, even as global demand slipped to its lowest level in more than 2 years. The impact right now is that Chinese imports to the US have gone up and US exports to China have gone down. Obviously, there will be a price to pay at some point in the first quarter. No real impact after the Chinese New Year. And that's what we will see coming. There's a few months remaining to see if that rings true. Global air freight and sea freight volumes year over year, you'll see that throughout 2018 that has declined. Looking at China's containerized freight index, that has also begun to slow down over the last few years. And if you look at it from basically the financial crisis, it's been on a slow and steady decline. All right, and last but not least, the Suez Canal container ship net tonnage has been falling quite a bit here year over year throughout 2018, along with everything else. This is happening globally. This is happening on so many different levels, not just shipping, not just the stock markets, not just looking at emerging markets, not just looking at one index or another. It seems to be a whole set of issues. They all happen in an asynchronous fashion. It's hard to keep in line with them, but you have to piece all the puzzle together and you need to figure it out for yourself. I'm trying to help you guys do that, and I know that I'm piecing this all together for myself, and I'm trying to give you an idea of what's happening. There's so many things, and the more I read, the more I realize I don't know, but I'm trying to do my best every single day to try and keep up with it, because it seems like the more I read, read, the more information there is to read. And that's ultimately what you find as time goes on. So that's it. If you found the video informative, please give me a thumbs up. When you give me a thumbs up, you're supporting this channel. That's all you gotta do is hit that thumbs up button and you'll be supporting me. And last but not least, if you want the financial education that you were not taught in school on purpose to keep you from the details that you need to know, well then, all you gotta do is read these two books. These two books will give you all the answers you need to know from A to Z, everything from the foundation all the way up to how to make money and becoming self-sufficient and so on. Check them out. Link is in the description below. If you want to see the little trailer of them, you can get that at themoneygps.com, and the audiobook is also available at themoneygps.com.